Um, I haven't made a video in months, I think. Now this video is going to be based on, or it's going to be revolved around this challenge that I've passed. Now I have been funded with FTMO in the past, going back 3 years ago. So I'm 22 right now. I have been trading for about 5 years now. So just as COVID hit, so 2019. So it's coming up to 6 years now. Let's say early 2020. Sorry. And obviously, yeah, it's been 5 years at this point. Now, I've been funded with FTMO in the past. Talking about 3 years ago, just couldn't sustain the account. I'm still funded with funding pips, but again, with the instability in the prop firm space right now, not to say that it's not getting better. I've never had a problem with funding pips, but I think FTMO being the most reliable one, and again, in the past, the slight difference in pricing, whether it was 50 quid, $50 or $100 or whatever, made a huge difference. But as time's gone on, you start to realize that it's kind of better to kind of put your money in a prop firm that not just you but traders from all across kind of respect and trust, right? And that's the only thing with traders as well, especially in the prop firm space. You want to know that the challenge you're doing and the challenge you're taking time on passing, and your time and energy and your strength and your mindset and having everything put together, you want to know that at the end of it you will be 100% rewarded for the efforts that you put in. The last thing you want is to pass fund account and have that account like my Forex Fund, True Forex Funds. I remember waking up one morning, and I think it was on a Thursday if I'm not mistaken, or no, a Friday. Woken up, accounts gone, company's gone down under, right? So that's basically the reason I'm going with FTMO. Good thing with FTMO, it suits my trading style. I'm an intraday slash swing trader. If you go back into my previous videos, you'll see the kind of style. I'm not going to go into too much detail with this video because I just recorded literally the same video just a few minutes ago. I think it was like 40 minutes long. I don't want to release a 40-minute long video. So I'm just going to do a quick breakdown, quick overview, quick breakdown. And then obviously try and do this every few weeks if I have the chance, if I have the energy, and if I have the time, which is the main thing. But again, going into FTMO, the good thing about it is bi-weekly payout, so every 2 weeks. Suits my trading style because I'm not hitting profit points. I'm not hitting, I'm not entering close-out trades within the first few days, within the first few hours. My trades do last a few days, maybe coming up to even close to 2 weeks. So it's a nice balance. On top of that, with FTMO, they do offer a refund on the first payout. My idea is you put down, let's just say $500 on an account. On my very first payout, I'm not after anything crazy. 1%, 2%, let's just say it's 5%. For argument's sake, can we extract anything out of the market, get our challenge feedback, making this entire account risk-free? Meaning in the worst case scenario, we've lost nothing, we've just gained. In this case, so again, we've passed our FTMO challenge after long, tedious, long months. We've passed it after on the 9th of September. Passed the verification on the 16th of September, which is 7 days later. And then we got our first payout on this account on the 10th of October, which was 2 days ago. So I just want to go over the trades that kind of passed me. Again, the first, so I have a little box here just to block out price action a little later, or current price action. But just to go over the system quickly in the most simplest form, I'm not going to go into too much detail, at least not in this video. My system is based on, it brings me back to the same point always, and I always repeat it. What are the different variations of the same price action on different time frames? Where on one particular time frame, so let's just minimize. Where on one particular time frame, we're bearish. How many times have you seen this? We've broken bearish. We've been bullish for quite a while. Bullish. We've broken bearish, to change of character, or whatever you want to call it. Let's just say we're at a point of supply or something, and the price ends up taking these highs. In cases where we've seen the same price action, we've seen breaks of structure, we see price sustain that bearish move, and then we see that continuation eventually. What's actually going on? So then again, it always brings us back to the same point, or my main point, which is the different variations of the same price action on different time frames. Where this could be, call it whatever time, call it the 15-minute time frame. On the daily time frame, this would just be a simple push up, push down, continuation up. Nothing but a simple pullback. On the weekly time frame, it could have been a case where this point here could either just be this wick being created, it could be price filling in some sort of imbalance, right? Before seeing that bullish candle expansion. Again, what does it look like? It's simply a push up, push down, continuation up. That's number one. Number two is, let me just minimize this as well. Number two is, we have a prevailing trend. We'll always have a prevailing trend, and we'll always have a narrative, right? We'll always have a direction that we're looking for. So let's just say we're bullish in this market. We break bearish based on some sort of structural level. Now, I'll always need two narratives, and coming from them two narratives, I have further narratives. So the first narrative is, okay, we've gone bearish. Reason as to why we should go bearish, quite simple. Break structure, we've got the supply point. As price comes to 50%, we can be kind of looking at short continuations, all based on context. If in the case, because again, there's always going to be factors that will negatively affect our trade. 1 second. So in this case, if in the case the shorts don't work out and price pushes up higher, I need a reason. Now, whether I take the short or not is besides the point, or whether this plays out is besides the point. I just need to know the reason. I just need to know if this doesn't work out, this is the reason. So I'm not, I'm not going crazy. Why didn't this work? Because I always know there's a percentage chance that our trade may not work out. If I can just have it in my mind that this is the reason, I'm happy. So in the case where, let's just say we're bullish. So the first thing is, we're bullish. This is my narrative, trying to go long from here. I then need a backup narrative as to why the shorts, as to why this point might not work out. So my backup narrative is, if in the case price takes at this point, what's the reason? This is basically what my system is all based upon, fractal structure. When price takes out low points, what is it telling us? The intent is this price point is cheaper than previous buy regions, meaning that new set of buyers could be interested in this price point, taking this higher, linking that with different variations of the same price action on different time frames. On a high time frame, this would just simply look like a push, pullback, continuation. Whether this come back into the 50% of a range, whether this just taps into some sort of high time frame imbalance and see that continuation. Again, low time frame structure will always break in order to fulfill a high time pullback. It's as simple as that. So I have my first narrative, my backup narrative. Then an opposing narrative in this case would be, so just link it with this, break of structure. Could this work out? If it does work out, we could then get involved. So we're just planning all around, like, what can happen, what can't happen, reason as to why this can happen over this, and and so forth. Is the simplest way I can put it. And it all comes down to context, and it all comes down to what your prevailing trend is, and then building upon that. 1 second. Okay, so let's go into price action. I'm just gonna give you one quick, two, three quick examples before we go into our price action. Prevailing trend is bullish. So let's just say, based on your own context, prevailing trend is bullish. We see a break of structure. This break of structure could have been a clear 4-hour break of structure. Even on the daytime, it's a clear break of structure. First narrative is, yes, we want to potentially see this demand hold. There's reason as to why we then look to see this get taken out. Now our backup narrative is, if this gets taken out, why could price go bullish? Because again, different variations of the same price action. Go to the weakest time from this, push up, push down, filling in some sort of imbalance, and seeing that continuation up. Simple. So at this point, we could then try looking to see if price can regain control. Now there's ways that we kind of maneuver around not getting stopped at once, twice, 3 times. A lot of it's to do with our session open. Our session open being 1:30 UK time to 3 o'clock. From 3 o'clock, we give a bit of a leeway of about 5 to 10 minutes, maybe, give or take, from that point. But no, I'll never enter minutes. I'll never enter before 1:30. That's my golden rule, right? So there's times where, based on context, where we could have taken very short-term shorts, knowing that our overall bullish is long. But based on the high time frame, we understand why we are going long, because overall prevailing trend is bullish, and we know structure would be taken out in order to fulfill a high time frame pullback. If it's still confusing, go to the high time frame, just view this on a high time frame. For as long as you have that bullish narrative and the bullish prevailing trend context in mind, this is very simple to read. Then we see what? Bullish, same thing, expecting this to hold. And again, losses within here are fine. There's ways that we can maneuver, waiting for these lows to get taken out, and there's plenty of ways that we can. I'm not going to go into this video. There's different videos on the channel you can look back into. This gets taken out. Now, we instantly go to our backup narrative. What are the reasons as to why price can go bullish? Because overall, we have this larger ATB range on a high time frame. This is just, so if this is the daily time frame, go to the monthly time, go to the weekly time frame. This would just be a push up, push down, back into 50% before that continuation. Now, we may take a loss here, we may take a win here. So that loss is a valid loss for as long as it follows certain protocols. I'm not going to go into it this video because I'm trying to keep it as short as possible. So we've seen one example, two examples, and then the third example. Very, very simple. And this way gets a bit complex. So I'm not going to really go into this price action, but fractal. So all of these points worked out. All these points worked out. Price comes down into this point. You look for that continuation in. Even on the lower time frame, you might see points within here that price could have ended up holding. Just like each of these daily candles, we saw bullish, bullish, bullish. At what point did price go bearish? Could we have played continuation? Of course, could have played continuation. And there could have been losses within here. We account for that. Hence, what our stop. Hence, what our win rate is around the 50% mark, give or take. Yes, it can rise up, but overall, from a monthly, from a 6 months perspective, it is around the 50% mark, give or take 10% either way. But let's just say, keep it simple, price has pulled back, we look for that continuation, 100%. Now price comes lower, that's when we look at our backup narrative. That's when we look at opposing narratives as well. If for whatever reason, price has tapped into something or intention has changed, we've seen a large ATB range, pullback, continuation. Our first narrative being bullishness, so we're still looking at bullish ATB range, price comes lower, we get taken out. Fine, that's fine. So now what a lot of people start doing is they will start looking at this supply point. Okay, let's just say we didn't get involved here. They'll start looking at this supply point because not only have we seen break structure on the lower time frames over here, we've seen further continuations, further confirmation, sorry. Now they're 100% confident on this point. Our price ends up taking out this point. Think about it. Larger ATB range. We have to be wary when price takes out major structural points, price takes out major structural points. Could there be a new set of buyers entering this market, being offered better pricing than previous buy regions? Lay off the sell positions, because technically, even from a seller's perspective, think about it from a seller's perspective. If you were to enter this trade up here, and you got these major low points right here, would you not be taking out your profit around this region anyway? So it's, even from a seller's perspective, you kind of be, laying off this market anyways. So from this point, I was bullish. Again, there's a period of time for a month or two, I was in a bit of a limbo. I was taking winning positions, taking losing positions, taking winning positions. Again, everything's accounted for. The months where the market is, or the times where the conditions are in our favor and the market is just running and running and running, and it's quite clear, these are the times we make our money. These are the times we'll see them 10% months. Where previous 2 months we've made nothing. We might have made -1. Maybe. Sorry. Let me just. -1, -2. So we might have 3 months of overall -3. The next month comes, we're up 10, let's just say 10%. We're up another 5%. And we've kind of made our half year salary in that 1 month. So again, it's not really a problem being in, bad conditions, for as long as you can control yourself in these bad conditions, bad cycles, that's all that matters. Anyways, again, that's what we have to deal with being swing traders, or intraday / swing traders. Larger ATB range, fractal structure, just pull back into deeper points of this range. I knew that from this point I want to be bullish for as long as we see that continuation. Now, the opposing narrative is telling me that yes, we can end up seeing this supply working out, because again, you can never disregard the opposing narrative. If in the case this worked out and I was aggressively buying, I would have been down a further 3%. Right? So I never want to be disregarding, but again, I understand why the buys can work, I understand why the sells can work. So when I enter, and if I take that stop loss, I understood why it could end up leading to a loss. But again, my conviction was in the bullish side. It was in the bullish side. It made more than enough sense for me to play the buys. So when we go into price action, I'm not going to break down any of this just yet, maybe on another video. I just want to focus on the trades that passed me my challenge. Price takes out these lows. Instantly, that tells me buyers can enter. Why? Because when you take out structure, price is being offered better pricings than previous low points, new set of buyers can enter. Now, based on the fact, just give you a quick insight, based on the fact that we've seen bearish intent, bearish intent. I had to be a bit more neutral. I couldn't be aggressively buying into this market. Why? Because this supply oversupply could have ended up working out, and I didn't want to take that stuff because I knew, because there's certain within discretion, there's certain times and places where I may not take trades just based on a discretionary point of view. And I knew for me to take an entry here, knowing that we've seen intent 1, intent 2, price tapping into supply points or the extreme of this supply point. If I was to take a short somewhere around here, if I was to take a long somewhere around here and got taken out, I would have been really bummed out because I'm like, clear intent, even though I understand why pricing go bullish, why pricing go bearish. So times and places just based on discretion where I might not take a trade. Anyways, we go bullish. Just be transparent. There was a loss within here, but price ends up coming down lower. A lot of people look at this as, I'm not an SFC trader, I'm not an ICT trader, I'm not a liquidity trader, but from their point of view, they'll see this as price tapping into extreme points of supply, taking out liquidity from these highs, break of structure, only bearish, and what's happening, price rips to the upside, and takes out this high. My overall narrative was, I'm bullish on this market, and I know every time price comes lower, and it will look very, and there's times where it look very unpleasant, very unorthodox. Price is basically taking out these lows, taking out these highs, taking out these lows, but I know this just fortunately giving me more and more opportunity to get involved, more and more opportunity to, just buyers in general to get involved. Because what it's telling us is, again, based on this of the high time frame, swing low to its current high point, which was previously this, now this pullback. It might look a bit messy, but going to the month time frame, just look a push up, push down, continuation up. Whether this month took out previous months or previous week's low, whether we tapped into an imbalance or whatever. But yeah, the main thing is this is a large push up, pullback, continuation. This would have been the pullback. Price just comes lower. That's all it is. Price just comes lower, giving us a complex pullback. And within that, yes, we may take a stop loss, which is fine. For as long as we can control and we can manage that stop loss accordingly. End of. Anyways, price comes lower. Now I'm starting to get interested. However, again, I'm still neutral because price is still within this region. If in the case this supply ends up holding and we see that continuation down, or this supply ends up holding and we see that continuation down, I will be bummed out. Because we've seen the first intent, the second intent of that bearishness. We're seeing that price. You can see from both perspectives where you can see buyers aren't finding any, we're not seeing much buying activity. We're not seeing much buying pressure above these highs. And X, Y, Z. We're going to be very neutral. What we end up seeing happen, I was on holiday on the first week of September. So I'm neutral again. We've taken out these lows, so opportunity for buyers. We come back into the supply. So let me lay off these buy positions. What does price do? We've taken out these low points, come into low halves. Now, here's the thing. We could have easily done something like that. And it could have potentially been a short position, whether I've taken it or not. It's besides the point, right? But what we end up seeing is taking out these lows where intentions could have changed, and we've seen a new set of buyers that are looking to maintain this market. We see this getting taken out. So because I'm overall bullish on this market anyway, the way I'm looking at it is within this large ATP range. So this large ATP range, we're taking a fractal structure, we're given opportunities to enter at further or better buy regions. If we see some sort of intention, or if we can enter here, again, you can enter here, for as long as the stop loss in a decent place. Where's your stop loss? Where's the most protected stop loss within this region? Or where would you assume the protected stop loss or protected low point to be? This low. So I knew that I could have entered here with 30 stop. Now here's another thing. I entered with 30 stop loss. It's my default stop loss. It's my default stop loss. I'm not no smaller, no bigger. I will only ever go bigger. I will never go smaller, but I try keeping to 30 pip. The only time I would go bigger is if I have conviction in the move. Yeah, it's not at the best price point. I would then give myself a bit more of a buffer. We'll go into that in one of the trade examples I'm going to show you. But the reason being is, look, I'm expecting, if I'm taking buys for a New York session, either price is at low points of the day, or price has come into low points. We're looking to protect these low points of the day, and we're seeing that further intention now. USD's daily average range is, let's just say, anywhere between 40 to 60 pips, give or take. I'm not giving exact numbers. I'm not 100% sure. What's the likelihood that price, you entering at 130 being the last session hour of the day, where if price is going to move, it's going to move. What's the likelihood that price is going to enter? You're going to enter at 130, and price is going to push down 30 pips and then push into your direction all in the same day. Whether you caught the low point of the day or the low point of the day has been confirmed and we've seen further intentions, it's not likely that price is going to push steps away from your direction and then in your direction all in the same day. If it does take you out, the likelihood is you've been stopped out today and the market is going in the opposing direction to what you thought it was, which means that you've not actually missed out on the move just yet. More than likely, I'm talking about there's a very high chance that the day will just end up in the opposing direction. Maybe tomorrow you get the entry, or maybe your overall narrative was completely wrong and just go back to the drawing board, redo your analysis. Hence why I use a favorite stop loss. So for me, this could have been an entry. However, again, we're just coming out of a supply point. This could have been an easy to break structure, pullback continuation. So I didn't enter. Again, there's protocols in place as to why I would and why I wouldn't enter. Once happening, so let's go to the. Again, doesn't matter what time we go on. Everything is the same. Everything is the same price action, just in different variations. At low points, coming into these low points, what do we end up seeing? We've seen bullish intention. Now you can argue, well, you've seen bullish intention here. Why didn't you enter at this demand point? This is outside of my session. This is outside of my session. Simple as that. And plus, could this not have been price tap in, continuation, and that's exactly what happened. Price did end up seeing that continuation, but then we end up seeing buyers react out of this low once again, and we see that further intention. Now, for me, because I am strongly bullish in this market, and I'm saying to myself, we've seen some sort of intention come out of this point, whether it's this point or this point. Even if we entered here, stop loss would be around here, safe in a stop loss. Seeing further intention, yes, price can react out of this supply point. I'm not taking away that fact, but because I'm overall bullish, knowing where we came out, it all derives from this low point, this low point. I'm okay, if price reacts out at this point, and we're seeing further intention once again, 130 is around here. I said to myself, where's my bare minimum point? I'm happy to take an entry where my stop loss is protected at a protected low point. If we're seeing buys and the price tapping in and we're seeing further continuations, I'm not really expecting price to take out these lows. Even if prices take out these lows, it just means that maybe tomorrow I'll be offered a better entry to get involved. It just means I've had to take the risk of that 1%. I've got hit with that 1% loss. Anyways, like I always say, you can enter here, you can enter here, you can enter here. For me, I'm entering with a bare minimum and more than likely a maximum of a 30 pip stop loss. What it also does is a lot of times it gives me that picture perfect, that perfect entry as well. Although I'm not after that perfect entry. So let me see my charge here. So for me, even if I was to enter here, let's just say I was to enter here. Firstly, why wouldn't I enter here? It was outside of my session. Why wouldn't I enter here? It's outside of my session. Where was within my session? 130, which is literally at this candle. Now, did I enter at the high of this candle? Did I enter at the lowest point of this candle? No. Well, I said to myself again, before any session starts, I've predetermined the direction I'm going to trade. I predetermined my stop loss placement, or my plus placement, which then gives me a predetermined entry placement, because I know that if my stop loss placement, it doesn't have to be directly at this low. I'll give myself a bit of leeway. Sometimes that does mess around with my stats, but I want my stop loss to be somewhere around this region, which means that bare minimum, my entry would have to be somewhere very close to this price point. It can't be up here, it can't be, and it can be down here, because then just give me a bit of buffer. So then I was like, okay, we have major ATB range, we have this fractal structure. You know what? Let me slap my entry at this low point. Limit order set, and I'll show you the limits before and after. Price tapped in. This flew 4%, 4.2, 4.3R with a 2% risk. Passed my challenge. Happy days. Now we're seeing further intentions coming to the market. We're then finally seeing, because again, think about it. We've seen highs get taken out. We've seen lows get taken out. We then see highs get taken out. What's the likelihood that price is going to keep ranging like this? It's not likely. Me seeing this happen, sorry, me seeing pricing at these lows, price taking out these highs, pricing at these lows. Yeah, again, what's the likelihood that price can continue to do this? So because I'm overall bullish and we've seen that bullish intention now, I'm happy to continue playing this buy position, knowing that I'm looking, knowing that I'm looking at these major high points up here, right? So it's the same thing, right? We know we're looking at this high point up here to get taken out. We're seeing, let's go to the daily time frame. So we just entered here, taken profits. we see that there's an imbalance within here. So we know, okay, there could be a chance that price can come lower into this point, and we then see a further continuation up into this market. So I want to be careful with this point. So price may come lower. So if we just mark that out, so mark that out. Kind of gotten rid of that, but usually I don't really mark them out because again, an imbalance is as simple as a candle low break, right? Whether there's, let's just say there's no imbalance here. Let's just say price this week comes all the way up here, so there's no imbalance. Idea still stands that if price takes out previous week's low, we're still coming into deeper price points. We're still coming into deeper price points relative to previous regions of buyers, well, you know, within a large ATP range. So the concept still works whether it's an imbalance point or just a candle low point. It's the same idea because the same thing here. Again, the real truth is price coming to imbalance is literally price is giving us a pullback. So whether you mark out the low or the high, it doesn't matter. Hence why I don't focus on these liquidity concepts. I don't focus on these SMC or ICT concepts because everything kind of means the same. There's hundreds of traders playing the same buy position with different perspectives and opinions and stuff. Everything works. Just whatever makes the most sense to you and whatever is the most repeatable. So instantly I'm seeing that I'm like, okay, there could be a chance that price can take out these lows. And if anything for myself, I'm happy to take longs beneath this point. All it means is we're within a large ATP range, price taking out factor structure. We're at lower price points compared to previous low price points, and matching that up with the high time, which yes, it is an imbalance. We can play that by. Happy to take that. Now, I'm not disregarding the fact that price can react out this demand point, and we can see that continuation. It's just at this point, given the context on that on this current point in time, again, there's different factors. It could be the weekly candle formation at this point in time. It could be daily candle formation. There's so many things. Hence, when you backtest, when you go over data at a later stage, it's very hard to pinpoint exactly your thought process. But in the moment, is the only time you can actually explain exact reason as to why you're looking at certain trade ideas. So at this point, okay, price can react, and I said to myself, okay, price can react, and we can see that further continuation of something. Again, I can't tell you exactly what I need to look into my journal to show you exactly what I was looking at, but just to keep it simple, I said to myself, look, it's either I miss out on this move and I get involved later, or price comes lower and gives us better entry regions, and we have reasons to believe price can come lower, not to say it is 100% going to come lower. So then I said to myself, it's either I wait for price to come up higher, it's either, and then I play further intention at a higher price point. It's either price comes low and I play buys within here, or maybe I could play short, knowing that this short position would be a C setup because they're going completely against the point trend, completely against momentum at this point in time. Played it smartly. We've seen price come up lower, taking out factor structure. So factually, we can see something like that. News comes out at 3 o'clock, push up high. So my thing was, look, let's play it smart, just based on market experience. Price pushes up higher, end up seeing candle flip. Could we see then a expansion to the downside? That's exactly what happened. So we then entered this trade, this being the first trade on a phase 2. Around this entry, and this candle smacked our take profit early morning. Happy with that trade. So I'm gonna keep these trades on here. Slightly lower. This trade as well. And I show screenshots of everything as well. 4.3 right there. Now, tapped into the imbalance, larger ATP range. Session comes in, we see intent. So I was like, you know what, let me give it a go. I've given this a go. And I said to myself, look, I'm going to enter with the 30% stop loss, knowing that it is in the middle of nowhere. It's neither is this a C setup, it's not an A setup as well. I'd call it a B setup. It's in line with our overall direction, yet our stop loss isn't in the most place, and we've not seen a bullish build up just yet. What a bullish build up will look like is this. Intention, price pullback, session times around here. We've seen some sort of intention. At this point, we're not really seeing much intention. So we're the first people to get involved, but again, within overall range, tapped into the balance within previous daily low. I was happy to take this trade. Just a B, it's not a C setup, it's not an A setup, it's a B setup. I'll give it, you know, it's a decent setup, it's an average setup. Me knowing that if price is going to take us out, we're going to be bearish for today, or we're not going to end up we're not going to end up flipping this anytime soon or anytime within the next few hours. So if we get stopped out, tomorrow would be a better entry, better chance to get involved. And I had conviction on the bullish side. This is the one time in a few weeks, maybe over the last few months, where I was so confident in the bullishness. Hence why I held these trades. Hence why, again, I took this trade knowing that it could come lower, and then the next day comes, we took this trade. I'm not going to mark that out, it's too clustered. Taking out these lows, The idea is we're still within this larger ATP range. I'm giving it one more go. News comes. Again, like I said with this trade, it doesn't necessarily have to be exactly at these lows. Somewhere around this region, it just means it just does skew with my stats, because if in the case price it comes slightly lower and then pushed up higher, you know, that's the only problem. But again, would I enter up here? Would I enter up here? No, I'm gonna have to enter. I'm gonna have to find a decent point to enter. So it could have even been a case if I want my stop loss dead at these lows, my entry would have to be, my bare minimum entry would have to be at this point. In this case, I wouldn't have got tapped in. So giving myself a chance where session's starting. So what's the likelihood? Again, also considering the fact that what's price can push up at any point. My 30% stop loss should protect me. What's the likelihood the price can come all the way down before pushing up higher? Taking all these things into account, I managed to get into this trade. So I'm up 2%, down 1% with this trade. So I'm net 1% positive on the phase 2. And then this trade stretched to a 4%. Closed out just before this got taken out. Happy with that. And that completes the challenge phase overall. Now, funded account now, we're taking up these highs. Intentions could change. We're taking up major high points. So I know instantly I'm not looking to be aggressive. Whenever we take up major high points, I'm not looking to be too aggressive in this market until evidence shows us otherwise. What do we see? Price, again, this is coming to the end of the week, so I just let price come into the new week. Price comes into more lower part of this bullish range, so we can be looking for buy. Then I was looking for buy position, but at the same time I'm like, okay, where is session opening? Session's opening after printing this larger ATP range, after taking a major structural point, taking a fractal structure. So yes, we have this on the bullish side. On the bearish side, after taking a major target points where intentions could have changed, and we see a new set of traders slash sellers coming to this market, could intentions have changed? We have major high, major low point, we've got fractal structure. Session opens around here. What does that look like? Push down, push up, further continuation down. That's what it looked like on the high time frame. But then I was like, okay, and based on the candle formation as well, this being a new week, the week can open up like this. No wick to the downside, no buyers got involved. So we're like, okay, could it be a case where we're pushing up higher to then create that wick, to then see that candle expansion to the downside? That's exactly what happened. Again, these are things that you can't necessarily see after the fact or after it's happened, because you can only see live in time as the weekly candles playing out. So based on that, I was like, okay, I'm bearish in this market, but I'm quite scared to get involved just yet, because is my stop loss, should my stop loss be here, should my stop loss be here? My stop loss is going to end up being here if I enter with 30% stop loss, even though I should have been okay with that. I was a bit hesitant, considering the fact that, look, we're still overall bullish, and I'm instantly trying to switch my narrative. That's one thing. But again, I'm kind of bullish, I'm kind of bearish, I'm neutral. Let me just stand down for a bit. We see that intent coming to the market. I'm happy now. Price doesn't break structure just yet, so I'm like, perfect. We've seen intent come into the market. I've taken a fractal structure. Here's where I was like, let me just wait for a slight pullback up, stop us around, somewhere around this region. I'm entering this trade. We went off of that. Again, there was an entry here. I won't go into it, and as to why I kind of avoid these entries at times. Price played in our favor perfectly. Where I then took a stop loss is, look, this is the last point of demand where this market entirely shifts for the short term at least. Enter, got stopped out. I'm happy with it. It was a C setup. In the case where, based on the fact that momentum currently was bearish, so it is a C setup, but overall we're following the prevailing trend at the last point of demand. Hence why I entered, got stopped out. I'm not complaining. Moving on to the next day, or moving on to the next trade. So we just seen bearish intent, all derived from price taking out major high points. So intentions could have changed based on the weekly formation, based on certain things I'm looking at, based on us having a large ATP range, based on certain characteristics of price as the week was playing. I was overall bearish. We've seen price take a fractal structure. Now, again, could we be bullish from this point? 100%. Price taking out previous low points, so we can be bullish. So just keeping it consistent, just keeping that in mind that we can be bullish. We've seen that build up, price comes into this micro level supply, which I wasn't expecting to hold. But in the case of price holds this point, I didn't want to be the one entering buy here at a point of supply. Again, more so neutral, so standing down a bit. Price takes out fractal structure. So I'm like, okay, we've taken out fractal structure within a large ATP range. We've also taken out a range low, so we're kind of bullish, we're kind of bearish, so I'm kind of neutral. But then I said to myself, there's certain formations within this. I was like, you know what? let me test out the cells. I have reasons to believe that price will kind of short. So I've entered these cells at this price point, so 501, 508, sorry. Let's type it here. Now a 30 stop loss would have kept me into this trade, and this trade at these lows would have played out 3.5. I held it to a little lower, so it would have been around a 4%. However, based on certain characteristics, based on certain things I've been testing, based on me literally just getting stopped out as well on previous position where I'm slightly down, this is me using my initiative, knowing that I'm so comfortable, so confident in this position, but my stop loss isn't in the best place. I stretched this to a 50 pip stop loss. Not too often that I do this, so entries around here, not too often that I do this. Through testing, I know that this region, using the OTR, using this region for my stop loss, where I know that price may not actually come up this high, but I don't know exactly where price is going to stop. This was where I was comfortable, so instantly I was a lot more relaxed entering this trade, as opposed to having my stop loss kind of in the middle of nowhere, even though I'm following my 30 pip stop loss ruling, which does follow through majority of the time. Go test it for yourself at that 130 mark. Again, there's different factors that you have to consider. I have the 130 to I have my 1:30 to 3 o'clock, which is my default session time. Then there's certain factors which would then have me play my secondary model, which is the 2 p.m. new 4-hour candle. That's a video for another day. You probably can see it in certain videos that I've shown in the backtesting videos, especially. This played out over 8 days, smashed a 1 to 2.3, which resulted in, after profit split, after conversion and stuff, a 1% gain, 1 point something, or $1,000 payout, which then on top of that, 500 plus 500 for the refund fee, which I was aware of. So I've netted $500 on this account so far. It's not a lot of money, but again, combine that with your day-to-day job. Let's just say your day-to-day job. I'm working a part-time job as well, which pays this is in pounds, so 1.4k plus, based on this, just based on a 2-week very slow condition 2-week cycle. You're looking at, so this would be about $1,000, 200 plus 1.4, so you're looking at 2.6 grand pounds at the end of the month. This is just based on a 2-week cycle, based on 1 week's worth of payout on a very, very slow market. Because again, previous to that, over them 2 weeks, we hit 4%, 2%, minus 1%, that's 6%, minus 4%, that's 10% that month. So again, there's periods where we're only making this much. There's also periods where we're looking to hit that 10k mark, which I never do, because I'm happy to just cap my payouts. If I hit 2% tomorrow, so Monday comes, I hit 2%, I'm happy to just stop trading the markets. That's one habit that I want to kind of break out of to see better growth. But again, I'm just giving you the idea that if we then land a month where, let's just say for the next 2 weeks, we end up hitting, all it takes is 2 trades for us to make our 5%, even 1.5 trades hit 5%, $5,000. That kind of covers, based on what I'm looking for, covers 2 months worth of income. Any more than that, you're looking at 3-4 months worth of income being covered by a few days of trading. So yeah, and obviously this, considering that this is one account, you're looking at, right now I have this account, I have another account, so I don't take the same exact positions. What I do is I also rotate as well. So if I've locked in profits for this account, I'm then looking at the next account, wait for the profit date, look to play something on the next account. So you can kind of somewhat double this, and that's the exact thing that we're looking to do. We're looking to scale capital, not scale our trading and our frequency. So 1 day of trading, which makes us $1,000. Let's just say 1 month of trading that makes us, $3,000 on this account, makes us averaging the same on the second account. So actually we're up $6,000 all in all. That's the idea that we're going for. Hopefully this breakdown was somewhat beneficial. Again, the idea is if you can just secure your first pay and your refund, a lot of stress gets relieved, and you start to realize that, look, if your average salary is 2.4, this based on UK, 2.4 after tax, if you can somewhat match this give or take based on an average. So some months higher, some weeks lower, some months break even, and then combining this with a part-time job that can pay you around 1.4 like it's doing for me, you're in a considering that you're in a really good position. Again, your part-time job wage won't really necessarily change, but your trading, you know, some months can be very good months, some months can be very bad months. Again, as long as you have some sort of cash flow coming in to keep yourself afloat from your bills and stuff, that's all you need. Hopefully, the breakdown was beneficial and whatnot. And yeah, I'll come up with some more every few weeks. Any other updates, any other payouts, I'll try making more and more videos. But for now, I think we call it a day. It is quite late at night as well.